This podcast is for informational purposes only and does not constitute legal, tax, investment, financial, or other advice. It is not intended to cause or induce breach of an existing agency agreement.
Hello? 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 This is the Vancouver
Commercial
Real Estate Podcast.
And welcome back to the Vancouver Commercial Real Estate Podcast. I'm Cory Wright.
And I'm your other sometimes host, Matt Scalena.
Long time no see.
It is. You look tanned.
That's just me getting burnt driving here.
Well, before we go any further, Cory, we got to say we have Clayton Olson on the show today, Associate Director, Property Tax Consulting at Altus Group. This was actually, we just got off the line with Clayton. This was a phenomenal conversation.
See, a lot of people don't understand how much impact, good or bad, property taxes have on commercial properties, whether you're a tenant or a landlord. So we wanted to have Clayton on to kind of unpack a little bit how these taxes work, how they're assessed, the impact they have on tenants and
owners.
And owners as well, right? And that's one thing too, is from a landlord perspective, a lot of people look at these costs do get passed on to these tenants in a triple net lease situation. But a lot of these tenants, they don't really care when they give you a check for $5,500 where it goes. They just know they're giving you $5,500 a month and that's their rent. So as these triple net costs go up and the property taxes 9 times out of 10 is the largest contributing factor to the increases, those rent checks get bigger and bigger and bigger from a tenant standpoint. And you get to a point where sometimes those tenants can't pay. So it's really important to understand how the process works. If you want to appeal your property taxes, what goes into them, what's a mill rate,
right?
All that stuff. So Clayton kind of unpacks everything. Very interesting episode.
Great conversation with Clayton. So stay tuned for that. And Cory, it sounds like last week you talked about your trip to Disneyland.
Me and Rod, we touched on it a little bit, yeah.
But I have some I have some specific questions.
Ask away. Let me put my Mickey ears on first.
Well, I don't know how many people listening have been to Disneyland. I have not been to Disneyland.
You're missing out.
Is that true?
You're missing out.
I was going to say, first of all, is it an enjoyable trip for you or did you do it just for your kids?
So we had booked Disneyland. So our kids are 4 and 6 now. We had booked Disneyland to go in May of 2020. So everyone knows March of 2020, everything shut down, right? Going now when they're 4 and 6 and they're of the right height to get on rides, the first trip was 100% selfishly booked by me.
Is that right?
There's no way these kids would have gone on any rides now in hindsight.
Hold my drink.
Yeah. In hindsight, these kids would have got on no rides. But it was great. I haven't been probably I think I was 10.
Right.
The last time I was there now. So now I'm 27. So that's 17 years. So I haven't been.
For the listeners, Cory's actually 65.
yeah, I've been 27 at least 20 years in a row. And it's a magical place when you go in there. I think one thing too is because as kids, you grow up with Disney characters and Disney movies, and it sort of plays a large part of your life. So when you go there, you go on the Dumbo ride. Right. You see Mickey Mouse. So there's a lot of that stuff. And then when you experience it with your kids, when they're going through the stuff, obviously they're not watching the same movies, but when they're going through the stuff and they can relate to the characters, and then you see the Toy Story guys walking around and you go on the Toy Story ride, it works well for both. But it was a selfish trip booked for me, no questions asked.
Well, okay. And here's the other question I have for you. Before you left, you mentioned 40 above. You mentioned COVID outbreaks.
Yeah.
And you mentioned today that they were at capacity every single day, which is 85,000 people.
Yeah, I inquired with the people there. I'm like, how many people actually go to Disneyland? And they told me, there's 2 parks side by side. So you got Disneyland on one side and then California Adventure Park, which is like your Pixar characters and cars and all that stuff.
Right.
And the girl in Disneyland told me that Disneyland capacity is 85,000 people plus staff.
And so 2 things. One, did you feel safe? Did you feel like you were ever going to faint from the heat? And how long were the lines?
Well, so here's the thing. So to be honest with you, when we got down there, it was only 28 or 29 degrees. So it was cooler than we expected, which was great. But again, you are walking around with 85,000 people, hot rides, and concrete everywhere.
Right.
So it feels like it's hotter than what it is. I completely lost track.
Oh, no. Lines. Because in my mind, it's like,
lines.
Isn't it just standing in lines all day?
Sorry, I was thinking Cheerio sticks. Lines. So there's a thing called Genie Plus that you can buy. It's $20 more per person per day.
Yeah.
And it gives you what they call lightning lanes. So you can go stand in the peasant line wait for 2 hours, or you go book yourself the lightning lane for $20 per day, and it tells you what time to show up at. So for example, me and my older son, Owen, we would go on Thunder Mountain, and these kids have never been on rides, and I've never ridden the Matterhorn or Thunder Mountain or whatever so many times in a row than I did with the kids. But we'll book a lightning lane, and it will say like 1:30. So we'll book ourselves in for 1:30. We'll do other rides up until that point, and then we go up there, we scan our app, because it all comes on an app now, scan our app at 1:30, and we just walk by everyone and just walk right on.
Does anybody harass you as you're doing that?
Well, if they did, I would just say, hey, just pay the $20. Like it makes it worth it, the $20, because you get on so many more rides, and especially later at night. We got to the point where we were literally going from the Matterhorn to the Teacups to Thunder Mountain to Pirates back to the Matterhorn, because you just book these lightning lanes and you just off you go.
So you do it again?
100% right now. I'm debating about going at Christmas time.
Is that right?
Selfishly, I want to go for Christmas.
I was going to say, maybe we should wait and do Clayton next week, and we should just do Disneyland. I think my curiosity is,
how much rent is this ice cream stand paying in here?
Yeah, exactly. But maybe we should cut to our talk with Clayton Olson, Associate Director, Property Tax Consulting at Altus Group. I learned a lot, and this was actually a very useful conversation for understanding the commercial real estate market, an area that we haven't really touched on.
Great episode. And one thing you learn in this episode, that if your neighbor pisses you off, you actually got a tool you can use. Enjoy, guys. This week's episode is brought to you by our great friends at Impact Commercial Group.
Really enjoy working with Impact Commercial. And we should say Al and his team can basically do anything when it comes to lending.
Anything when it comes to under the commercial umbrella. You're building a building in development, we got you covered. You're buying land, we'll make that happen for you. You're investing in a property or multifamily building, check. Owner-occupiers looking to acquire their own space, double check. Anything commercial financing you need, Impact Commercial is your go-to.
ImpactCommercial.ca. And we should say, over 50 years of combined experience. So trust these guys. They're the right fit.
Best in the business, in my opinion.
Okay, so we're here with Clayton Olson, Associate Director, Property Tax Consulting at Altus Group. How you doing, Clayton?
Really good, guys. Thanks for having me on.
Thanks so much for taking the time today, Clayton, especially in deep August. You should be at the beach, but you're here. We appreciate it.
No worries.
Maybe can you start by telling our listeners a little bit about yourself?
Yeah, sure. So I'm a real estate appraiser by trade. I spent the first 11 years of my career in a variety of appraisal-related roles at BC Assessment, actually. And a lot of that time was spent as an assessment appeal case manager working on a variety of major property types, including major retail properties, development land, industrial properties, etc. At the beginning of this year, I decided to make the jump to the private world, and it's where I joined Altus Group as an associate director here in property tax consulting. So my role here now is I work with various clients to navigate the property tax process here in BC. So that ranges from things like assessment, appeal, negotiation, advocacy, and litigation to due diligence, reporting, tax projections, and basically any other consulting services to do with properties and property tax. Personally, I'm originally from Kamloops. Did my undergrad up there at TRU, and I've been down in Vancouver for about 12 years. Currently living in North Burnaby, and that's about it.
Very, very good. It strikes me that you were on the inside, and now you've come to the outside to help people fight against the the BC assessments, which is kind of a noble purpose. Just thinking, when you work for BC Assessment, like, does BC Assessment get those assessments right most of the time in your mind?
You know, I mean, the thing you got to understand with it is that they're doing mass appraisal. So they're assessing over 2 million properties every year. They assess every single property. And I mean, you got to expect that they're going to miss something. Now, one of the common misconceptions about assessments is that they're kind of always low. And one of the reasons behind that is well, for the last, I don't know how many years, we've been kind of in an uprising market. And so the assessments, when the assessment comes out at the beginning of the beginning of January, it's actually a reflection of a market value estimate as of July of the previous year. So by the time it comes out, it's already 6 months dated, and in a fast-moving market, I mean, you're already well past what that could be. So I mean, there is that, in some cases, a misconception that assessments are always low. I think they're always just behind. Now, that being said, I mean, when you start digging into individual properties and specifically commercial properties, I mean, there's, as Cory is well aware, I mean, almost every commercial property is different. And I mean, there's so many different complexities. And so to expect a corporation like BC Assessment to always get it right, I mean, it's just not going to happen. And that's kind of where we come into play.
Well, Clayton, one reason why we wanted to have you on the show today is a lot of our listeners may or may not know how much effect commercial property taxes have on commercial real estate. And mainly when we talk about leases, we have triple net leases and stuff like that, where all these costs get passed on to the tenants. And one thing you could probably draw some conclusions to it is, as we talk about inflation rates and, property taxes is right in there with that stuff on a commercial real estate side of things, all these costs eventually get passed over to us as consumers. Can you maybe break down a little bit for our listeners there how property taxes work and how they're sort of evaluated for it? Because commercial real estate owners, you get a bill for $20,000 one year and next year it's $26,000. Can you maybe break down a little bit about sort of like how that incremental increase happens and how it's looked at? Yeah,
for sure. So the assessments come out, as I mentioned before, every year at the beginning of January, and basically the assessment is a market value as of July 1st. So that's one component of the property taxes is getting your assessment, and then you go through the appeal process if that's something you choose to do. And then once that assessment is finalized, then those assessments are sent to the municipalities. And it's at that point the municipalities will come up with their mill rates or their tax rates. And they apply those tax rates to the assessed values. So it's important to remember that, I mean, not always, if your assessment goes up, it doesn't always necessarily mean that your taxes are going to go up. I think that the more important thing to look at is, what is your assessment doing in comparison to comparable properties? So, for example, if you have a multifamily building and your property goes up, say 30% year over year, whereas competing properties that are similar to yours only go up 15%, then yeah, you can expect that your taxes are most likely to go up. Typically, the mill rates, tax rates are based on the municipality's budgets. So, depending on, always know that oftentimes those budgets continue to go up. So, it's always kind of a balancing act for the municipality to what they want to set the rates at and how that relates with the assessed values.
In the Lower Mainland, Clayton, I feel like this was probably back in 2016. It seemed like it was a hot topic when foreign buyers in the residential world, at least, were thought to be very active in the market. And one of the reasons Vancouver or the Lower Mainland was so attractive was because we had very low property taxes on the residential side. I think some of the lowest property taxes or lowest mill rates in North America. Is that the case? What's the relationship, I guess, between residential and commercial real estate when it comes to how they calculate property taxes?
Yeah, it's really municipality dependent. I mean, you'll get some municipalities where that spread is very large, and some where it's not quite, and that really just depends on the population base and split between how many residential properties and how many commercial properties are in a municipality. At the end of the day, the municipality needs a certain amount of money to operate, so they're going to distribute that tax burden as they see fit. But I mean, in a typical situation, I mean, you're going to see a residential tax rate anywhere from 4 to 5 per $1,000 in assessed value, and then you're going to see commercials between. I mean, it can get as high as 25 and as low as 10. But I mean, typically you're looking at least 7-8% higher. Oftentimes a lot higher than that, almost double for a commercial property.
And can we say, or do you know, I guess, who the worst offenders are in terms of municipalities for those real high rates?
I don't have that handy in front of me right now.
This would explain a lot why Starbucks coffee is $7 now. Clayton, one thing we hear about too, especially in the commercial real estate side, is as municipalities are further being developed and gentrification comes in, some of these single family homes get assembled and become development sites, or even some of these older, let's say industrial buildings or whatever, that they become better used, if I get my English right here, for a higher and best use under, say, a new OCP. And what happens is, Matt here owns the $20,000 rickety little industrial yard at the corner there, and he goes and sells it to one of our big developer friends for $10 million. The property's assessed at $1 million. And before you know it, the brokers are all getting letters and phone calls from BC Assessment trying to figure out why did that property sell so much higher than the assessed value. In that circumstance there, and let's say that information becomes readily available to BC Assessment, what does BC Assessment do with that if they find out it sells for $10 million for development purposes and the site was assessed at, say, $1 million? How do they take that in consideration when they're reassessing the site for the next year?
Or sites nearby too.
Yeah, no, I mean, at the end of the day, the assessments are based on the market value. The thing is that, I mean, you really have to understand the motivations behind that, and you have to understand when there's speculation or what that sale price is actually based on. And I mean, at the end of the day, BC Assessment is required to reflect the market value. But that being said, they have to operate under the parameters that are set. So what is the OCP? What is the zoning? What was that sale purchased on? Was it purchased on the allowable density under the OCP, or was it purchased on something more than that? And ultimately, BC Assessment has to basically get to the bottom of what those sales are indicating, and I mean, and that's why, I mean, it's important to really review your assessment and understand the sales that BC Assessment is using to set that assessment.
So let's say, for example, I get that assessment as a landowner, and I think my value's gone up way too much, and I have to pass these costs on to my tenants in this commercial situation. And I want to be as diligent as I can as a landlord to try to minimize their costs so they can afford to pay my rents. What can I do in that situation? What is the appeals process? Who do I engage for the appeals process? And what is the process that will actually play out? And how long does it take?
So as I mentioned previously, so the assessments come out on a yearly basis every January. And the property owners have the right to appeal their assessment by January 31st of every year. It's important to note that you can't appeal to, there's two levels of appeal, and I'll go through those in a sec here, but you can't appeal to the second level unless you've appealed to the first. So that first level of appeal, it's called the Property Assessment Review Panel. And after you submit your appeal by the end of January, that panel basically runs through February and March. And it's a very high level. Oftentimes, like here at Altus, when we're acting on behalf of clients, we'll engage in high-level negotiations with the assessor. There's opportunities for online tribunal hearings if you aren't able to agree on a value. And then at that point, if you still disagree with what these assessments putting forth as an assessment, you have the opportunity to appeal to the second level of appeal, which is the Property Assessment Appeal Board. And that's a little bit more of an in-depth process. So the board, in that case, will assign an appeal case manager who basically guides a mediation process. So we'll be engaged in appeal management calls, settlement conferences. We'll be submitting written appraisal submissions and even going to oral hearings. And those negotiations do take place through the year.
One thing that strikes me is if you're on the residential side, you have MLS, so you have tons of data, and you're just doing straight comparable analysis, presumably to get to the market value for residential properties. First of all, it seems like there's some more detective work on establishing the value on the commercial side, but also there's a different way to assess value in commercial. Does that play a role in how these assessments are done?
Yeah, absolutely. So, I mean, the thing is that there's an ongoing joke in the appraisal field is you can talk to 4 different appraisers and you're probably going to get four different opinions of value. I mean, that's no different when you're talking about assessments. And there's some key things that we have to be aware of when we are reviewing an assessment. You're not only looking at the market value. Yes, you're looking at market sales. And when we're talking about commercial properties, you're also looking at market rents, you're looking at market cap rates, you're looking at expenses, you're looking at vacancy rates. But another thing, and I would say like maybe 75% of the appeals that we move forward with aren't even necessarily on a market value basis. They're more on what's referred to as equity. So basically it's a fairness. So you have to be treated similarly to other properties that would be considered the competitive market set to your property within the same jurisdiction. So that's one of the big reviews that we undertake at Altus is reviewing other properties to make sure that our clients' properties are assessed fairly. One other thing, or a couple other things that we do look at as well, in addition to the actual assessed value, is the tax classification. We talked earlier about tax rates, and depending on the tax classification that the property falls within, you're going to see a different tax rate. So, and oftentimes those tax rates will differ by quite a bit. So, and that classification just depends on what your property is used for. And then there's also other property related taxes too that we have to consider.
Would there be a reason, or have you ever done an appeal to increase the property taxes on a property?
I mean, not really. No. I mean, the thing is, like, you see it oftentimes more on the residential side, where if someone is thinking they want to sell their property, it's a common thought that people look at the assessed value. And I mean, I'm sure you guys could speak a little bit better to that. But I mean, you have seen it over the years where people think that that's going to have an impact, and they will ask for an increase. But I mean, on the commercial side, I mean, typically no. I mean, I wouldn't say that is a typical practice.
Maybe put another way, is there any negative implications for challenging the assessed value of your commercial property?
Yeah, I mean, one of the things we do at Altus is when we do have a client and we are reviewing their assessments at the beginning of the year, we are doing a cost benefit analysis of going ahead with that appeal, right? I mean, you have to consider what kind of tenants do you have in there? What are they paying? How does that compare to what the assessor is applying? And is there a chance? Because I mean, there's always a chance that if you go down this road, and I mean, the property may be low, and there has been cases where maybe the assessor will seek a higher value. So yes, I mean that's part of our role here is managing that risk and giving recommendations as to if a person should appeal or not.
What's taken into consideration by the assessors when they're looking at these appeal cases, or maybe better yet, what do you bring forward on your client's behalf? Is there certain things that you look for when you do an appeal and say, hey, you have that in this property? No problem. We definitely feel we can get the value down.
Yeah, I mean, it really depends on the type of property. But I mean, if you're talking about an income producing property, I mean, the first place you're going to start by looking at the rent. When BC Assessment's assessing a income producing property, they're using the income approach to values. So they're ultimately trying to establish a net operating income using market rents. So first thing you're going to do is you're going to look at either the market rents in the area, and you're going to look at the rents that your property is generating, and you're also going to be looking at what kind of vacancy are you seeing in that property. Does it fit in line with what BC Assessment's using as what they refer to as a market stabilized vacancy rate, and then also cap rates. They're using stabilized market cap rates, and we're going to look at sales in the area and see if those cap rates are supported. And then when you're talking about development land or vacant land, you're still looking at sales, but I mean, you're looking at costs, you're looking at servicing costs, you're looking at basically anything to do to develop that land, whether it be rezoning, what kind of DCCs, CACs, how does that compare to other properties that are similar? So yeah, I mean, there's a lot of complexity to commercial property when dealing with an assessment.
So let's say me and Matt, we each own a lot side by side in a gentrifying area. We'll just, for argument's sake, say they're each 10,000 square feet, very similar in stature. And Matt goes and sells his piece of land for $10 million to a developer. Me as the neighboring landowner, should I be nervous at this point from a tax perspective that he just sold for so much and that now I have no need to sell, I don't want to sell, that now I'm going to be getting a really, really nice letter come January about a much higher assessment value on my property, which I'm sure our friends at City Hall are going to love, and then that's going to eventually roll over into higher property taxes sometimes?
Yeah, I mean, if that property, if it's a market transaction, then I mean, yeah, I would definitely be a little concerned. I mean, on one hand, I mean, you have a property that's worth $10 million potentially. On the other hand,
smells violin for Cory.
Yeah, the biggest gain on paper ever, but still no money in the bank.
It's one of the only assets where people oftentimes get concerned when it goes up in value. But no, I mean, at the end of the day, like it really just comes down to knowing about that sale and what kind of speculation went into that sale. Was it actually based on fundamentals or was it based on speculation? And at the end of the day, BC Assessment, when they're saying the assessments, they can't make assumptions. They have to go with what the zoning is, what the OCP is. And I mean, if one sale doesn't necessarily make a market, but I mean, if you got a few sales in an area and there's developers in that area looking to purchase, and I mean, yeah, I would start to expect that you're going to see some of those taxes increasing for sure.
You know, just thinking about using Cory's example there, the property owner next door who didn't sell is getting nervous, right? As I understand it, property taxes are passed on to the tenant. So I guess two questions. One, and maybe this goes to both of you, why should the owner actually care? Because it doesn't actually come out of his or her pocket. And two, is it possible for a tenant who's actually paying the property taxes to appeal? Or do they have to go through the owner and kind of really aggressively pursue it through the owner if they really believe their property taxes are too high?
Well, Clayton, I'll leave the second one to you.
Sure. Yeah, go ahead.
So just to why the landlord should care is because a lot of times small business tenants or any tenants for that matter really don't really care how their check to you is distributed. They just know that I'm paying you $4,356 a month. And what happens is if that property tax jumps dramatically, my triple net costs go up dramatically. Next year, that check might not be $43.56. It might be $51.90. And that difference could be the difference for me making or breaking my business. And if I can't make those rent payments to you as Mr. Landlord, eventually you're gonna say enough's enough and you're gonna move me out. So now you're not getting rent from me. You may not be getting rent from anyone at that point. You have commissions and all these costs to re-tenant the property. And depending on in the situation of the business cycle, if it's not a very attractive market for tenants at that time, inflation's high and everything, you might have a lot more vacancy down the road. So that's why, I mean, from a landlord perspective, you want to be as diligent as you can with your triple net cost to your tenants, because that has great effect on them operating their business and eventually actually making their rent to you.
It's kind of just as an aside, it seems like there's an interesting relationship here where market values being high lead to higher property taxes, which potentially lead to rents going down if property taxes get too high.
Well, what you'll find too, and there's a great story here, and Clayton, I don't mean to take out your time here, is if you look at the Joey's on West Broadway, and Clayton, you might know a lot about this and maybe jump in. There was a Joey's restaurant on West Broadway. And the story goes, and this is secondhand information, so I can't say it's 100% true, but after their 10-year period, their SkyTrain's coming, down that area. Density changed dramatically. The OCP allowed for a lot more density on their site, and thus property taxes went way, way up on their site. The landlord went to Joey's, and Joey's said, hey, we can't renew because we can't make any money at that. And apparently they even offered them less base rent than what they were paying in their previous term to try to make up for those property taxes. And it still didn't work for them enough. They walked away from the property. And that property sat vacant, huge property sat vacant for very, very long. So that's an example from a landlord perspective where that there caused dramatic problems to them. The tenant couldn't operate. They had even tried to reduce the rent they were collecting to make up for it. Still didn't make sense for the tenant. And there was probably a good 12 to 20 month vacancy there. That kicked in.
Robson's
right? Another.
Yeah.
So Clayton, feel free to jump in if you have anything more to add.
Well, actually, yeah. And also, I'm curious to hear that second question, Clayton. If you want to speak to that, are there tenants that reach out to you to try and instigate the appeal process?
Yeah, absolutely. Yeah, I mean, anybody in BC can appeal any property.
Oh, interesting.
So you could appeal your neighbor's property, but I don't think you're going to be the most popular neighbor. Tenants can definitely appeal the property taxes, and it's fully within their rights. And we do see it all the time, and we do act on behalf of tenants for sure.
So, in terms of just out of curiosity, from 100% of your clients, would you say the majority of them are tenants, or the majority of property owners? And if somebody's interested in doing an appeal through Altus Group, like how does this work? Do they pay? Is it by the hour, or how does it get structured?
Yeah, so I mean, I'd say majority of our clients at Altus are typically more on the owner side, but we do represent tenants. When it comes to like how we work, typically we try and kind of work on what we refer to as a turnkey basis. So if we take on a client, we're going to be reviewing their assessments of all their properties on a year-to-year basis, and so when the assessments come out, we'll make recommendations on which properties we think the assessments are reasonable, and which properties we think that there's something there, and we'll recommend which ones we would like to pursue an appeal. And then if appealed, then we will handle all the negotiation and litigation that comes along with that, including any sort of appraisal reports and anything that comes along. And we will automatically review those assessments again on a year-to-year basis and handle all of the communications with the assessors. Now, I mean, when it comes to the cost of that, I mean, we have a variety of different options. I mean, a lot of clients are just on a fee-for-service basis. So, yeah, essentially just paying for the review and paying for an hourly review of that and consulting. We also offer the opportunity to, if clients want to go more on a contingency basis, we will do that as well, based on tax savings achieved. So I'd say it's a pretty even mix on how that works. But yeah.
So I guess you say you learn something new every day. I did not know I could go appeal Matt's property taxes here. So yeah.
Actually, please don't.
Yeah. I'm going to apply to get your property taxes up. So is it fair to say then that you've probably run into situations, kind of like my example earlier, where Matt goes and sells his property for $10 million. I'm the neighbor I don't want to sell. His property taxes next year, or his assessment comes out dramatically higher next year because of recent sales in the area. Is it fair to say that maybe the neighbor calls you and says, hey, my assessment's going to go up or has gone up. My neighbor's has gone up. This is why I want to appeal my neighbor's assessment.
Yeah. I mean, I don't know, like you're right. I mean, we get it all the time where there'll be kind of appeals of an entire area when some of the owners in the area feel that the increases aren't warranted. And yeah, I mean, oftentimes we'll represent multiple properties in an area. I mean, to appeal your neighbor's property, I don't think it's necessarily going to do you too much good in that circumstance. It's more getting the full details on that sale and understanding if it's representative and trying to distinguish your property from that property if that's actually the case, if they're using that sale to increase properties in the area.
You know, this might be a tough question to answer, but maybe as a final question, we're in August. I guess July 1st is when the assessments were done. Mm-hmm. We're in a very different environment in 2022 than we were July 2021. Is your general feel that the assessments are going to be overall lower or higher when they are released in January?
Yeah, I mean, maybe I can throw that question even back to Cory. I mean, from what we're starting to see, I mean, I think it's starting to slow down a little bit in terms of sales coming through, and I mean that may create some opportunity in terms of assessments. I mean, the less evidence, the harder it is to justify the assessment in place. That being said, I mean, it's really market specific, but it's really hard to project. But I mean, if values, like for example, I mean, industrial continues to go through the roof year after year, and I mean, it seems to me that this year, I mean, values are continuing to be strong, and so that's going to ultimately result in higher assessments in that property class for sure.
Clayton, before we let you go, and we know you're a busy guy here, we have a 6-pack of lighthearted questions we ask all of our guests so we get to know you outside of the office. Do you have a few more minutes for us?
Yeah, absolutely.
The 6-pack is powered by our great friends over at Red Point Law.
Oh, the guys at Red Point Law are fantastic, Cory.
For all your legal needs when it comes to commercial real estate, visit them at redpointlaw.ca. Okay, first question up. Favorite vacation spot when you find the time?
Yeah, you know, I actually grew up going out to Shuswap Lake. My family had a place out there, and when I go out there, it still has that nostalgic feeling. So I try to get up there as much as I can in the summer times. Nice.
One book everyone listening should read.
Everyone listening, that's a tough one. I'm going to go with my most recent one I finished, I guess. It was a very, very interesting read. Not at all real estate related, but sometimes you need that mental break, I think. But a book called Red Notice by Bill Browder. It's very relevant for today, just what's going on in Russia and Ukraine. And it's about Bill Browder, who was one of the biggest hedge fund managers in Russia, who ultimately ended up exposing a bunch of oligarchs for corruption and became one of Putin's biggest targets. It just gives a really good insight into the corruption within Russia, and yeah, no, so that was a very interesting read.
You know what? I think that's the second time. I'm not sure if it was on the podcast, but somebody else has recently recommended that book as well. Red Notice.
Yeah.
So you're sitting in the Shuswap. You got your headphones on. Favorite band?
You know, I don't know if it was the high school I went to or what, but I grew up a huge hip hop fan. And I would have to say my favorite artist of all time would be a guy by the name of Lupe Fiasco.
Oh,
I'm going to date myself here, okay?
Please do.
When I was in, would it be my late teens or early 20s? I find myself at the Kanye West concert in Vancouver. And Lupe Fiasco was one of the opening acts.
Amazing.
That is early Kanye.
Early Kanye. Remember when you used to walk around with the sunglasses on that looked looked like blinds? You'd take off your grandma's window. That was the concert.
Oh, man.
Yeah. And Lupe Fiasco. Well, one thing, Clayton, that's funny is it's a thread that we have here through the commercial real estate industry, all aspects of the industry. If you hit any level of success in this business, you listen to rap. So many people come on here and they're like, my favorite guy is Biggie.
Yeah, guys you would not expect.
We had Mobb Deep one time. Yeah. We've had them all, and it's all the good stuff.
I guess we're all cut from the same cloth.
Right on. Clayton, what are you watching or binging right now on Netflix?
You know, I'm one of those people that repeatedly watches The Office. And I feel like it's just, I don't know what it is. It's some sort of a comfort, some sort of a stress relief. But at the end of the day, sometimes we'll just toss on an episode of The Office. It's a good way to kind of de-stress.
No kidding. All right. Second to last question for you, Clayton. You're on death row. What's your last meal?
I'm going to have to go with the bolognese from Ask for Luigi.
Oh, interesting.
I've never been to Ask for Luigi. I've heard it's supposed to be amazing.
It's great.
I've always heard so many.
Incredible.
Apparently, you got to get there right away because there's no seats.
Right. Yeah, there's only a couple seats in there. I don't know. Can you do reservations? I'm trying to remember.
I don't think so. They might have changed it recently, but they never used to. So
are they on DoorDash?
They actually are.
Oh,
Ghost Kitchen. Yeah. It's probably Ghost Kitchen.
That's probably the Ghost Kitchen episode we had. All right, Clayton. Last one here. So you're at the shoe swap now. You've been
on the boat all day.
You've been on the boat all day. You got the gangster rap going on the boat. You get off the boat. You're feeling great about yourself. You stumble into a bar and somebody gives you a karaoke mic. What song are you singing or rapping?
Oh boy, probably Bohemian Rhapsody.
Good choice.
I feel like that's the one I've sung the most with my buddies. So I'll go with that.
I'm just thinking of that Wayne's World scene now. You and your buddies.
That's where it all started for me too.
Well, how can people find out, Clayton, more about what you're doing and more about what Altus Group is up to?
The best way to reach me is just on my cell phone, 604-366-2846, or connect with me on LinkedIn. And my email, if you want to get in contact for anything to do with property tax here at Altus, is clayton.olson@altusgroup.com.
Fantastic. Well, thank you so much, Clayton, for your time. Like I said at the outset, it's deep summer here, so we really appreciate you taking the time away from the beach, and hopefully we'll have you back on.
Absolutely, guys. Appreciate it.
Thanks so much, Clayton. Take care.
Yeah,
bye-bye.
Thanks, guys. Bye.
There you have it, folks. Our interview with Clayton Olson, tax consultant at the Altus Group. I took a lot away from that. I did not know I could appeal your property taxes.
That's a big takeaway. They're too low. They're too low.
Yeah. You piss me off. You're going to be getting higher taxes next year because I'm going to call Clayton to get your taxes up.
Well, and here, in line with that, I think the big takeaway for me was that tenants often are the ones that are approaching Clayton and Altus Group because obviously it's coming out of their pocket in the end, and they have some skin in the game.
Again, I never knew that. Yeah. I assumed the process had to go through the landowner, and the landowner had to make the appeal as the owner of the land. I didn't realize the tenants could go make the appeal for the land. I guess ultimately they're probably paying the property taxes in a triple net situation.
You know, and one other thing, just thinking out loud here, there was recently a diner, I think in Kitts, that is shutting down because the rents are too high. And it's kind of like those love letters to Vancouver when people are leaving because, you know, they can't make a go of it here. And every 6-8 months you hear about a beloved business shutting down because their rents are too high. I didn't realize that a significant portion of that potentially is property tax.
100%. Well, you're looking at it like you see there's a couple of stories that could play themselves out. Sometimes you see these tenants that have been, in the property for 10, 15, 20 years, and they just have this long lease. And then the rates, the lease comes up for renewal and they were paying $10 and now it's $50 because the area's matured over the past 10 years. So that's one scenario that plays itself out. Other scenarios that play themselves out is maybe you own the land and you've had it forever. So you don't want to really kind of increase the rents too much. And then you go sell the land. The next guy comes in. He's like, well, I have to pay my debt. So I can't afford to give it to you what Matt gave it to you because I just paid Matt $5 million and market rents are this. So that plays itself out. Or you have situations like we talked about on the episode there where I think it was a Joey's on West Broadway where the property taxes had gone up so much, pushing the additional rent costs up so much that the tenant's like, hey, I can't even make my business work here.
Right. And I mentioned Robson. I don't know, but presumably there's those kind of choice locations downtown that you're wondering why nobody's in them.
Yeah, that plays a lot. And then where you find a lot of times too is like, say, the West Broadway corridor, for tenants that have been there for the past 5 or 10 years, when the SkyTrain wasn't talked about coming in the area, and all of a sudden now it is, the new OCP's coming out, there's greater density in the area. Some of these single-story buildings along there that are probably being assessed to the highest and best use, which is not a single-story building, that's where they see these massive property tax increases that they get to the point like, we can't operate it with this. We're working to pay the landlord at this point.
Maybe we'll leave it there, Cory. But for anyone listening interested in getting in touch with you at William Wright, how can they get in touch?
People can reach out to us anytime at our Vancouver office at 604-428-5255. Let us know what you're looking for. We'll put you in the best agent throughout the province that suits your needs. Visit our website, williamwright.ca, or they're always happy to drop me an email, Cory@williamwright.ca. Always happy to hear from people, good or bad. And always happy to talk real estate.
And last but not least, of course, these episodes of the Vancouver Commercial Real Estate Podcast do live at vancouverrealestatepodcast.com as well, where we have summaries of all the past episodes, as well as a listening device. I don't think a lot of people listen on the website. But if you're interested, vancouverrealestatepodcast.com, where all things real estate related live. And I think that's it. We're mid-August. Let's get out of here.
Yep, sounds good. Thanks for listening, guys. Take care.
Subscribe today.